And I will start the presentation with the financial ratio analysis. Starting with liquidity ratio, the current ratio of FGV company has been relatively stable over the 3 years. On the other hand, Genting Plantation has a significantly higher current ratio compared to FGV company. The current ratio for Genting Plantation suggesting a strong ability to cover short-term liabilities with the current assets. In terms of quick ratio, examining the quick ratio of FGV and Genting Plantation over the past 3 years, Genting Plantation has demonstrated a consistently higher quick ratio, indicating a more strong liquidity position. In 2022, Genting Plantation quick ratio of 1.9159 times remains significantly stronger than FGV ratio of 0.7108 times. Comparing the average collection periods of FGV and Genting Plantations over the past 3 years, FGV has demonstrated a consistently lower average collection periods, indicating a more efficient collection of payment from customers. In 2022, FGV achieved an average collection period of 20 days, showcasing an improvement in its receivable management. Examining the days sales inventory for FGV and Genting Plantation over the past 3 years, FGV has shown a consistent increase in the time required to sell its entire inventory. In 2022, FGV's days sales inventory is 61.537 days, indicating a longer inventory turnover period. On the other hand, Genting Plantation experienced a decrease in days sales inventory from 2020 to 2021, with a slight increase in 2022 to 36 days.
Based on the data in the table, Genting Plantation has a higher inventory turnover ratio than FGV in both 2021 and 2022. This means that Genting Plantation is more efficient at selling and replacing its inventory than FGV Holding Berhad. Based on the account receivable ratio, Genting Plantation Berhad has a lower ratio than FGV Holding Berhad. In all 3 years, this means that Genting Plantation Berhad is generally more efficient at collecting debt from its customer than FGV Holding Berhad. A lower account receivable ratio is generally considered better because it indicates that company is able to collect its debt from a customer more quickly. This can improve a company cash flow and reduce the risk of a bad debt. Based on the table provided, we can see that FGV Holding Berhad and Genting Plantation Berhad have seen an increase in their total asset turnover ratio from 2020 to 2022. This means that both companies are generating a lot of revenue per ringgit Malaysia of asset in 2020 to 2022. Based on the fixed asset turnover ratio, FGV Holding Berhad has a higher ratio than Genting Plantation Berhad in all 3 years. This means that FGV Holding Berhad is generally more efficient at generating sales from existing fixed asset. A higher fixed asset turnover ratio is generally considered better because it indicates that a company is able to generate more revenue from each ringgit Malaysia invested in fixed asset.
Next, calculations of the profitability ratio. Each ratio of the company FGV Holding Berhad shows the positive feedback of performance in every year. NPM slightly decreased in 2022, which is from 6.01% to 4.96%, means that FGV Holding Berhad less successful in managing revenue from sales to generate income. Moreover, return on assets of the company slightly increased. It signifies that an organization can make more money per unit of asset. Net return on equity. FGV Holding Berhad shows an increases. In this time, FGV Holding Berhad is effectively turning equity funding into earnings. In 2022, the company slightly decreased to 16.09%, but the company still managed well. Lastly, for the BEP of the FGV Holding Berhad, it shows the BEP increases in every year. It indicates that FGV Holding Berhad has an ability to generate profit from its asset. Next, Genting Plantation Berhad shows increment and well performed. For the net profit margin increase, in the 3 years, the company shows an efficiency in managing their revenue to generate more income or profits. Net the return on asset is performing well and showing an increasing percentage that result from 2020 until 2022. It indicates that the company is able to generate income from per unit of assets. Moreover, ROE shows an increases, means that it is effectively able to turn its equity into earning. Lastly, for the BEP of Genting Plantation Berhad shows an increased percentage. The data of NPM shows increment of Genting Plantation Berhad compared to FGB Berhad. NPM for 2022 for Genting Plantation Berhad and FGB Holding Berhad are 15.15% and 4.96%. It shows that Genting Plantation Berhad is an efficiency in managing their revenue to generate more income than FGV company. According to ROA of the both companies shows positive performance. In 2022, ROA of the FGV Holding Berhad is 7%, while Genting Plantation Berhad is 5.50%. It indicates that ROA of Genting Plantation Berhad is able to generate income from per unit of asset compared to the FGV Holding Berhad. According to the table above, both companies are performing well in managing their equity in 2022. ROE of FGV Holding Berhad and Genting Plantation Berhad are 16.09% and 9.10%. It shows that FGV Holding Berhad is effectively turning equity into earnings than Genting Plantation Berhad. Based on the table above, BEP, both companies shows an increment in the 3 years performance. BEP of FGV Holding Berhad is 10.80%, while Genting Plantation Berhad is 7.84%. It indicates that FGV Holding Berhad has an ability to generate profits from its assets and make it attractive investment options compared with Genting Plantation Berhad.
I continue this presentation about leverage ratio. For FGV company, in 2022, the debt ratio is showing the total debt was 3 times lower it had asset. In 2021, the ratio higher debt but still relatively low. In 2022, the ratio dropped, such as active debt reduction efforts. Meanwhile, for the Genting Plantation had a debt ratio in 2022 and 2021 showing responsible management with debt accounting. In 2022, indicating a stable debt level. For FGV company in 2022 showing a positive ratio and possible the deficit the shareholder equity. The resilient profitability of financial losses may have impact equity over the year. For the Genting Plantation on the 2022 higher than 2021, the decrease suggests a shift in financial from debt to equity ratio for FGV company in 2021 is decreased in 2021. This reducing the suggest active efforts such as repaying loans and retiring bonds. Genting Plantation had a long-term step to debt ratio. The ratio decreased from 2021 to 2022, signaling a shift the company position of long-term debt relative to interest expense. For the FGV company, the ratio increased from 2020 to 2022. This improved suggest a better capacity to cover interest obligation potential driven by increased earning before interest. For the Genting Plantation experience, a rise in 2020 to 2021, indicating improved the coverage in interest expense.
Let's delve into the year-to-year changes in the balance sheets of FGV company. FGV witnessed a noteworthy surge with a RM973117 decrease in current assets, primarily driven by lower deposit cash and bank Plantation Berhad. A substantial increase in total non-current assets emerged, attribute to property, plant and equipment with a notable spike of 258,590 in 2021 and 74,881 in 2022.
About common size analysis of FGV company for 2020, 2021 and 2022 revealed the positive trend revenue growth reaching 25 million ringgit in 2022 from 40 million ringgit in 2020. Cost of sales decrease resulted in a gross profit of 3 million in 2022. Revenue show improvement. There are the foundation of other financial indicated the mixed performance in FGV financial health. For the interpretations, Berhad for the common size of income statement for 2020, 2021 and 2022 highlight positive financial performance. In 2020, revenue increased to 3 million with consistent growth from 2 million in 2020. Other than the company maintained the positive operating profits reporting 23.34% in 2020. Implementation Berhad demonstrates stable financial health characterized by the upwards revenue trends and consistent positive profit.
Proceed with common size analysis of the balance sheets of FGV Holding Berhad. Genting Plantation Berhad during a 3-year period from 2020 until 2022. Both companies saw steady movement. Based on the table of balance sheets above for FGV Holding Berhad, there is decreased movement of non-current assets, which are from 72.54% to 66.53%. In contrast, the non-current asset for Genting Plantation Berhad slightly increased year by year. For the trade receivable of FGV Holding Berhad in 2020 until 2022 become inconsistent growth. It is because in 2022, receivable fell by 8.21% to 7.50% and climbed up to 8.92% in 2022. Meanwhile, for the Genting Plantation Berhad decrease, it indicates that FGV Holding Berhad performs better in asset cycle than Genting Company. Moreover, borrowing non-current liabilities in 2020 until 2021 for FGV Holding Berhad and Genting Plantation Berhad are in a good position, whereby the company is able to meet their long-term financial obligations without increasing the risk of default. Lastly, the total equity from 2020 until 2022 of FGV company increased. Meanwhile, Genting Plantation Berhad also increased from 59.68% to 60.43%. To compare these two companies, we can see that Genting Company is the most efficient and at managing its asset and liability, which can lead to a better financial performance and profitability than FGV Holding Berhad.
Moving on to index number analysis for comprehensive income for FGV company. FGV company shows the significant increase in the net profit, which is from 876.04% to 945.36% from the 2020 baseline of the 100%. This underscores both company effective sales generation, cost control and consistent annual net profit growth within a short 2-year span. As for Genting Plantation, the profits also shows an increase from 187.26% to 192.395% in 2021 to 2022 from the 2020 baselines of 100%. This highlight the efficient revenue creation, cost management and steady yearly net profit development of both business during a brief 2-year period.